Okay, guys, welcome. I'm live, and hey, good afternoon, everyone. For those who are joining me live and if you can hear me, please let me know whether my sound quality is okay. If it's okay, please type okay. And you can see right now I'm in my car because I'm doing a daddy duty to pick my son up at school right now. But it's okay. Nothing is going to stop us because I still got about 30 minutes before his school's release him. Okay, great. Can you guys hear me? Hey, good afternoon. Hi, Cheryl. Hi, Ethan. Okay, great. Now, today, this is the topic: how to make $100,000 in stocks in the stock market. Now, this is a very common question that I get. I mean, people don't really ask me about 100,000. They ask me, actually, there's a variety of numbers that they give me. So how much money, guys, do you want to make from the stock market? Can you please type a certain number in the stock market? Goof afternoon. Okay, thanks, Chloe Lim. Okay, so how much money do you want to make from the stock market? Some people actually tell me 1 million, but let me share with you the skills required to make 1,000, 10,000, 100,000, 1 million, up to 10 million is pretty similar. Anything after 10 million, that requires something a bit different. But so let's go ahead and make our first $100,000, shall we? Okay, great. Andrew actually mentioned 1 million. 50,000. Wow, different expectations, correct? Now, again, guys, I like to start with something a bit funny each week, and this is a inspiring money-related story or something inspiring, correct? So there was this journalist. This journalist went to interview a multi-millionaire and asked this multi-millionaire, "Wow, Mr. Multi-millionaire, 5 years ago, I understand that you only had $10. How did you become a multi-millionaire you are today?" How many of you want to know this answer? If you want to know this answer, please type $10. You can start with $10 and become a multi-millionaire. So the multi-millionaire explains. He says this. He said that 5 years ago, I took that $10 and then this is what I did. I bought some apples. From the supermarket. I polished the apples. I put nice ribbon on the apples, and then I value added and I sold them for $20. He doubled his money using entrepreneurship skills. So doubling your money. And then after that, second day, it became $40. Third day, it became $80. Guys, can you guess what is the secret of becoming a multi-millionaire? Can you guess? Now, the journalist was very impressed. The journalist say, "Wow, this is really the power of compounding." Can you all please type compounding? And then the millionaire continued to say, "Okay, second day $40, third day $80, and on the fourth day, one of my rich uncle died, and I inherited $10 million." Okay, this is meant to be a joke, okay? Now, well, some people, they have the luck to have a rich uncle who actually give them $10 million, but not all of us have this luck, all right, to do that. Okay, anyway, I'm just, this is just meant to be a joke. So it's gonna be bad. Yeah, correct. So anyway, I'm just kidding. So let's go back to the place where we can actually create our own wealth using our own skills instead of waiting for someone to actually give us inheritance, correct? Now, I want to explain how to make $100,000 in stock, but again, depending on our situation, depending on how many rich uncles we have, it depends on the amount of time. Okay, so now let me just go to this particular statement, right? Because I want to understand, what do you understand when I say making $100,000 from the stock market? So I'm going to give you two choices, and then you guys can actually tell me which choice sounds like the one that you are looking for. Okay. Choice number one, making 100,000 from stock market looks like this. Choice one is I buy stocks or I bought stocks using certain amount of money and I sell them at a higher price. And the net profits after I sell them is $100,000. This is one way of making $100,000 from the stock market. Now, what is the second way? The second way is this. I bought stocks and I accumulated stocks, and these stocks that I'm holding on to produced $100,000 for me in profits every year. Now, which one sounds more like the one that you want to actually make? Is it one or is it two? Please type that in the chat box or the comment. Now, because I can tell you, it is two different strategies, two different investment methods, and two different mindsets. For number one, it's more like a trading mindset, and number two is an investor mindset. There's nothing right or wrong about each of them. It is just is slightly different. But from my opinion, or can you all make a guess which one do I prefer? Okay, so you can see, right? Actually, for me, right, I'm more like an investor because investors' perspective, you get to buy, accumulate stocks, and it become relatively passive after a while. Because the stocks that I buy can produce me 100,000 every year, even whether I buy and sell them actively or not. Whereas for the first scenario, I have to buy, I have to sell, and I get the money. Now, so the question is this: how do I actually get $100,000 if I don't sell? Well, one way, of course, is you can still sell a certain portion of the stocks as it grows. Another way is for dividends. But today, I want to share with you the way that I built my $100,000 from the stock market. In fact, I built a lot more than 100,000, but this was the mindset that helped me a lot, and it is a very powerful investment method. Okay, let me explain to you how this works. Okay, so let me go ahead and share my screen, and I have a special spreadsheet for you guys today. How many of you love spreadsheets? Oh, it's a mix between one and two. Also, can I mean some of you have different ways of doing it. Now, let me explain to you what do I mean by making $100,000. So let me give you an example. Actually, I wrote in my Instagram how I look at this thing, and I didn't understand this for a long time. It's only after a while I realized this is the way like Warren Buffett, Peter Lynch, and some of the very great investors look at the stock market. Can you all please do me a favor and type invest? This is the way that we invest and not trade. Again, there's nothing wrong with trading. We can talk about trading in another episode, okay? But personally, I do not trade that much. I do a lot of investing. So now, how do I earn $100,000? I accumulate stocks. I become a collector. Can you please type collector? So now, what do I collect? I collect companies that makes money for me. So let me give you an example. This is Apple. And if you go to their ratios, you can see that every single Apple stocks, oh, it's loading a bit. I remember that every single Apple stocks is making us about $13. Oh, so what happened? The page is not found. Okay, it's okay. Let me use McDonald's. Okay, McDonald's. Now, because McDonald's, I think I have this open. Okay, for example, if I buy one McDonald's stocks, now I want to share something. Obviously, there are some other factors that we look at, but I want to go to a very simple way of looking at stocks and making wealth and money from the stock market. You can see here, McDonald's Corp. If you buy one share, you can look at this thing called earnings per share, meaning to say, one share, one particular share, how much is it making us? So if we scroll all the way to the latest, this is called TTM, which is trailing 12 months, or you can think of it as the last 12 months. Add together the past 12 months, every quarterly, how much they make, every share is making us $6.31. Okay, so now, if I buy one McDonald's shares, I'm going to make $6.31 that year because McDonald's is making me the amount of money. Now, how do I extract the money? I will explain in a moment's time, but let's look at this is how much I want to accumulate. Now, going back to my calculator, if I want to accumulate $100,000, okay, there's 6 okay, 6 figures, correct? $100,000 divided by $6.31. This means I have to buy 15,847 McDonald's shares to have enough shares to have an accumulated amount of $100,000. Okay, how do I get this amount? So for example, every McDonald's shares right now is $200, as you can see on the screen right here. Wow, it sounds like very expensive, but later I'll explain to you how it works. So what I have to do is this. I have to buy 15,000 of McDonald's shares, and each shares gives me or makes for me as a shareholder, reports that they make for me $6.31. So 15,000 shares multiply by $6.31. All in all, that year, I can expect to make $100 from the profits of that company that I'm holding. Okay, so this is called total earnings. Can you please help me type that down? Total earnings. Now, obviously, there are ways to actually make it better. So what do we do? Okay, let me show you this. This is something like 100,000 portfolio. Let me zoom in for you guys. And if you want a copy of this spreadsheet, just let me know. I'll put the link in the comments and on this post, you can come and download this spreadsheet. Now, example, this is therefore my job. My job is not to try to time the market. My job is to accumulate stocks. Example, if I buy Apple, okay, by the way, this spreadsheet is automated in the way that you can key in a ticker symbol. Example, let me see what ticker symbol is not there. What other? Okay, example Yum or Yum. Yum is a stock that sells KFC and stuff like that. You can see that automatically they show me what is the current EPS. So Yum, or not current, the latest EPS, earnings per share. How much is every share making us? $3.33. So for example, this month I have some savings. I will go and buy some number of stocks of Yum. Let's say I buy 30 Yum. If I buy 30 Yum, my Yum holdings, okay, I have 30 shares. Each share makes me $3.33. Altogether, I accumulated another $99.9. Okay. So now, my goal is this. My goal is to keep accumulating earnings from Apple, McDonald's, Skechers, Intel, and I keep buying shares. So currently, Intel, my total Intel holdings is making me $54. If I add another 20 shares this year, okay, it'll become $100. My aim is to make this total portfolio earnings $100,000. So far, do you understand what I'm talking about? If yes, can you please type yes? If you are not sure what I'm talking about, I mean, understanding and agreeing is different. Understanding is okay, I understand what you're talking about, but Sean, you are an idiot. What you're doing doesn't work. This is disagreeing. But understanding is okay, I know what you're trying to do. Okay, got it? So now, I think that this goal is a little bit easier for me because I've been proven time and time again. I've proved to myself I'm someone who is very lousy at timing the market. I don't know when to enter. I don't know when to exit at the perfect time. And sometimes I get pretty emotional. Whereas if I look at this way of investing, I just accumulate shares and aim for their total earnings to hit a certain amount of numbers. I feel a lot more easier to manage. Okay. So for those guys who are a little bit more emotional or you don't know how to like time the market, this may be a better way. You realize something very interesting. When I assess my portfolio, I do not have anything that indicates the current stock price. I do not. Now, then how do I know when to buy and sell? I'm going to come to that in a moment's time. But before that, your portfolio, you must understand, because I'm going to share with you guys this link on how to get this portfolio. You can start to accumulate, and it's much easier. I just going to buy one more Amazon stock to increase my total earnings. I'm going to buy a few more Coca-Cola stocks to increase my total earnings. Now, there are a few things you need to know. It doesn't work for ETF or non-US stocks. So for example, if I click an ETF called iPay is a mobile payment ETF. If I click iPay here, okay, I don't think it's going to load. Now, let me just show you this. When I click on this, you can see right here, I'm pulling the information from Google Finance. So it's automatically calculated for you. However, for ETF, there's no automation. So what we need to do is to go and calculate the EPS of the ETF ourselves. The EPS of the ETF. Sounds like a tongue twister. Well, you can practice it and say it 10 times before you go for lunch. Anyway, coming back to here, you need two information. Example, you want to buy an ETF called iPay. You need to find out the share price of the ETF right now, which is, I found it over here on Google. iPay price, 56.59. Going back to the Google spreadsheet, I can put here 56.59. And then I also need to have the PE ratio. To find the PE ratio of this ETF, personally, I like to go to etf.com/the ETF. Okay, you can search for it on etf.com. Now, certain point in times, the etf.com website, they will tell you the share price as well. But mine is a bit laggy right now because I'm in the car. Now, let me show you. I'm going to scroll down here and I'm going to look for this thing called PE ratio, price to earnings ratio. It is 34.06. Understand this. Price to earning ratios is price, current stock price, divided by EPS. So I do not have the information of EPS, but when I do a reverse engineer, taking this amount, putting it into my spreadsheet, I can reverse and calculate what is the EPS. Very simply, you can look at the formula here. It is the price divided by PE ratio. Okay, so the EPS is 1.63. So I can add ETF to my portfolio as well. iPay, and let's say I buy 100 iPay. Okay, I have to key in the EPS myself. Example, 1.63. Okay. Oh, it's not calculating. Okay, so you have to calculate this one multiplied by this one. It's not a perfect spreadsheet, but the whole key idea is to understand the psychology behind it. Okay, and that's where it adds up to my total earnings. Now, is it interesting so far? If it's interesting so far, that's where I want to go to the next step on how to decide how to actually build a 100,000 portfolio, $100,000 portfolio in terms of earnings. I'm not interested in my portfolio total stock price add up together is 100,000. Why? Because the next day it may drop. But you think about it this way, guys. If your entire portfolio, think about it, the total earnings is 100,000 based on a normal P ratio of about 10. A P ratio of 10 is actually pretty low. But if you have a total earnings of 100,000, multiply by 10, your net worth will be over $1 million. And I think it's much more achievable when you actually accumulate stocks bit by bit. Okay, later I'll come to some Q&A. But let me show you, once you get this spreadsheet, the next part is to click on stock list. At the bottom here, stock list. Now, let me share with you. This is how you can decide what stocks to invest. Step number one, you need to actually key in all the stocks that you want to buy. Example, these are some possible stocks, which you will actually receive in a moment's time when I give you the link. Okay. Now, the next thing is this. The next thing is, once you key in the ticker symbol, again, the current price has been pulled out for us. Remember, this is upon deciding what stocks to buy, and you already want these stocks put into your portfolio. Put into your watch list, your stock watch list. Now, this is the current price, and assuming, I'm just going to give an example, assuming you have $1,000 to invest every month. I mean, some of you feel that, well, 1,000 is very high, some of you think it's very low. Doesn't matter, you can adjust the number accordingly. It can be 500 as well. Now, when you key in the amount here, let's say you can key in 2,000, you can key in 500, any amount. This is the amount of money that you want to invest. Let's say 1,000. I'm just going to key in 1,000. We want to know this $1,000, which stock can give us more money back for our 1,000. So let me explain. Example, Apple right now, you can see AAPL, the ticker symbol. If you key in the ticker symbol, the current stock price is 500. So with $1,000, understandably, some of you are in different currencies, but let's talk about 1,000 USD. You can buy about 2 stocks. Okay, slightly 1.99 stocks. Now, if you buy 2 stocks, 1.99 stocks, and the current EPS, again, this EPS is being put automatically. The EPS, earnings per share, of Apple is 13.16. 2 stocks of 13.16, the total earnings is $26. Meaning to say, remember, my aim is to buy as much accumulated earnings as possible. With $1,000 this month, Apple, I'm buying $26 of earnings if I buy into Apple. Okay, how do I get 26? Again, the earnings per share, every share of Apple gives me $13. If I buy 2 shares, I'm getting $26. This is how it looks like. If I buy McDonald's share price is $212. Right now, I can buy about nearly 5 shares. I mean, we can round up and down a bit, right? Nearly 5 shares, 4.7 shares. Their earnings per share, every single share is giving me $6.31. So if I invest 1,000 to buy 5 McDonald's shares, I can get about $29, which is more than Apple. Okay. Later, I'll come to the portion of growth as well. Okay. Now, Skechers, Intel, and so on. If you scroll down and you take a look, in fact, the highest, which one is the highest? Let me take a look. Oh, the highest right now is in fact, BAC, Bank of America. If I invest into Bank of America, my $1,000 can give me $79. And if I keep accumulating, okay, you must understand, when the share price goes lower, you can buy more shares, and therefore the earnings per share will not change month on month. The earnings per share is based on their past records, which may fluctuate up and down as well. That's why the reason why this method is useful for me, because I look at very stable and consistent stocks that are growing steadily. I don't want stocks that fluctuate a lot. And this doesn't work for stocks that is in the negative. Example, let me see. Again, I'm not against any stock. I just want to say this. I'm not against any stock. Oh, so what is the earnings per share of Tesla? Let me just take a look. Is it making money already? Oh, there's 1.94. So if you invest 1,000 in Tesla, you can't invest 1,000 in Tesla because 1,000 now is $2,000. But you get the gist. You get the gist of it. I want my $1,000 to make me more money. Now here comes the portion. There's one portion that is not calculated here, which is the growth rate. The growth. Can you please type growth? Now, simply put, $1,000, I can invest into Apple and make $26 or accumulate $26, or $1,000, I can actually invest into McDonald's. Which one looks like a more valuable investment right now? Can you all please type? Is it MCD, McDonald's, or is it AAPL? Now, if you just base on pure numbers itself, McDonald's looks like it's a better buy because it's giving me more earnings, total earnings. But one thing is this. If we go and take a look at McDonald's growth, okay, I'll not go too much into it. You can actually search for Morningstar for growth. If you look at the growth rate of Apple versus McDonald's, Apple is growing much faster. Meaning to say, although I'm paying $1,000 to buy $26 worth of earnings produced by Apple this year, I expect or I believe that Apple, in fact, can grow a lot more than McDonald's. So within 2 to 3 years, this is the earnings today, correct? Let's say next year, I believe that Apple can grow at, let's say, 20%. Just for example, 1.2 multiply by this amount, the total earnings will become 31. Whereas I think that McDonald's will remain stagnant. So if I look at it a little bit longer term, a 2 to 3 years time frame, this $1,000, although is buying lesser earnings this year, but it will actually get more next year because I'm not going to buy and sell the stocks. I'm just accumulating. So if I buy into a fast growth stocks, in fact, within a few years time, let's say you talk about Amazon. Amazon is only 7.56. Okay, this is a bit difficult. If I buy Amazon now, Amazon need to grow a lot faster in order to catch up with the amount of total earnings Apple can give me. So when I look at total earnings, right, it becomes easier for me to know, well, sorry, I realized Intel. I missed out on Intel. Intel is $110 and I believe it can grow. So ladies and gentlemen, my choice for this month for investing, therefore, is Intel as compared to the other stocks. So this is the way that I actually operate when I invest. And this is the way that I look at my stock portfolio. So obviously, when some of the stock prices goes very high, I will choose to sell some of them. I take the money and I go and pour into other stocks that can give me more total earnings. Now, if this makes sense to you guys, just let me know that it makes sense and if it's been useful to you. Let me see whether you have any questions. Apple makes so much money. How come its equity keep dropping? The shares, correct? Now, Ken Koo actually asked a very good question. I can tell you this. I do not know why the shares keep dropping, but I love it because the more it drops, the more shares I can buy with my $1,000 or the more shares I can buy with the amount that I set aside every month, and I can get more earnings. Does it make sense? So this is a very fundamental and a value investment way of investing. It may not make sense to everyone. It takes patience, but I think it's easy. So a few things to take note of, guys. Okay, number one, right? Very importantly is this. Okay, is there share split? What other questions do you have? What are my views on share split? Will it increase demand? Yes, stock split typically will increase demand. Actually, I did a video on this. I'll not go too much into details. But when a share split, right, the share value doesn't drop or doesn't change. The company value doesn't change. It's just that now that $50 note, let's say you got a $50 note, it becomes $10 note. It becomes easier to transact. More people can afford to buy the shares. So there's more demand. Okay, this is the whole key thing. Now let me see whether there are any other questions. Okay, what was I talking about? Okay, three key things. Now, the first key thing is this. In my opinion, number one, have a list of stocks that you want to accumulate and collect. Make yourself a collector. Okay, collector. Now, number two, set aside a certain amount of money every month and start collecting stocks based on which one gives you more earnings now and the future. So think of both now and the future. Don't just think of, oh, this stock is giving me steady earnings every year. But next year, some stocks can actually outperform. So think of growth. And number three, right, very importantly, make sure you diversify and have a portfolio. If your whole entire stocks is only Intel, it is very, very scary. Make sure you got 15 to 20 stocks. Portfolio is extremely important. Okay, cool? Yeah, the $2 and $10 one, correct? So are these your ideas choice of stock? Yeah. In fact, I've been talking about these stocks. If you go to my YouTube channel, I have a video talking about my top 20 stocks. This is my idea portfolio, and I accumulate them pretty much on a monthly or quarterly basis. Okay? Right, I do hope that this has been useful. Ask me any more questions. It is time for me to go and pick up my boy. I do hope that you have learned something. If you have learned something, please type yes and also click on the share button to help me share this. And do come back to this post in about 2 minutes time because I'm going to refresh this post and post the link of the particular spreadsheet onto this post. Okay, look at the comments. Not comments. Look at the post description. I'll post the link there. That's where you can play around with the portfolio. Okay, I'll see you guys probably next week. See you. Bye-bye.